I think we probably are in a recession and that recession will get worse. These things pass and there will be boom times again. But it'll probably be some tough going for a year, maybe 12 to 18 months is usually the amount of time that it takes for a correction to happen.
Everyone is curious as to how much the cost of living will be as inflation remains at a 40-year peak. But the question that frightens consumers, markets, and the government are whether the economy will enter a recession. While economists are predicting a brighter future, Wall Street oracle Michael Burry says the actual storm is yet to hit. What is Michael Burry's prediction for the US economy, and how will it affect consumers? Stick around until the end of this video to find out. Recession is a word that no one likes to think of, but many experts are certain that it will definitely happen in 2023. A survey of 38 economists conducted by Bloomberg in December showed that they saw a 70% chance of a recession in 2023. That's up from 65% in November. Observers say that the Federal Reserve's interest rate will cut demand deeply. They predict that consumer spending, which makes up 2/3 of GDP, will barely increase in the second half of 2023. Median estimates 2023's GDP growth to be only around 0.3%. That includes an annualized 0.7% dip in the second quarter and zero growth in the first and third quarters of the year. Top business leaders, including Elon Musk and Jeff Bezos, have also warned of a recession. My advice to people, small business owners, is to take some risk off the table. If you're going to make a purchase, maybe slow down that purchase a little bit. Jeff Bezos said in November, "If you are an individual and you are thinking about buying a new large-screen TV, maybe slow that down, keep that cash, and see what happens. Same thing with a refrigerator, a new car, whatever. Let's take some risks off the table." If you are a small business, maybe delay some capital purchases. Do you need that new piece of equipment? Maybe it can wait a little bit. Have some cash on hand. Just a little bit of risk reduction could make the difference for that small business. Michael Burry, who became famous after his 2008 prediction of the market collapse, also shares the same views. The controversial investor has also made his predictions for 2023, and they all spell doom. Burry claims that regardless of how the word recession is defined, the United States economy will be in recession in 2023. Burry tweeted on the 1st of January saying inflation peaked, but it is not the last peak of this cycle. We are likely to see CPI lower, possibly negative in 2H 2023, and the US in recession by any definition. He goes on to describe a vicious circle of how it happens. The Federal Reserve, which has raised interest rates to an unprecedented level, will pivot and cut rates, while the federal government would then begin to give out stimulus packages to help households hit by the deteriorating economy. All of this will end with another emergence of inflation, similar to what happened during the COVID-19 pandemic. Basically, we are going to witness a reboot of what happened in 2020. Fed will cut and the government will stimulate, and we will have another inflation spike. It's not hard, Burry tweeted. Burry predicting will happen. In the past months, Burry warned that the economic situation was going to deteriorate seriously. He said that tech companies were overstaffed and layoffs of workers were on the horizon. Burry predicted that the stock market was going to be severely disrupted after 2 years of prosperity during the pandemic. Michael Burry predicts that inflation will continue to increase. He is totally against the expectation of deflation predicted by most financial experts and central banks. What interest rates are doing, exchange rates globally, central banks seem reactionary and in CYA mode, he tweeted. In 1978 to 79, rising velocity trumped falling money supply to drive inflation higher and higher, Burry explains. The velocity of money is increasing faster than the decline in money supply in the economy. This is his signal for higher inflation continuing. Burry isn't impressed with big rallies during bear markets as he knows it's normal historically. Dead cat bounces are the most epic. 12 of the top 20 NASDAQ one-day rallies happened during the 78% drop from 2000's top 9 of the top 20 S&P 500 one-day rallies happened during the 86% drop from the 1929 top, he explained. After 2000, the Nasdaq had 16 bear market rallies greater than 10%, averaging 22.7%, before bottoming down 78%. After 1929, the Dow had 10 bear market rallies greater than 10%, averaging 22.8% before bottoming down 89%, Burry tweeted. Michael Burry is not impressed with huge rallies in the stock market during dire fundamental conditions in the economy. In his post on September 30th, 2022, Burry tweeted, 13.48% of stocks closed above their 200-day moving average yesterday. Bottom in 2009 was 1.2%, bottom in 2020 was 2.8%, currently at December 2007 levels. 38.43% of stocks closed above their 200-day moving average, Friday, December 22, 2022. So price action to go down a long way before Burry believes the market has made a long-term bottom that will hold. Michael Burry's housing market predictions for 2023. Burry's warning about inflation going even higher in a second cycle also flagged mounting pressure on the housing market. In June last year, Michael Burry quoted from a blog post that highlighted the latest U.S. inflation figure of 8.6% for May 2022, which was at a 41-year peak, and said that high inflation has wiped out demand for mortgage-backed securities. The blog post cited by Burry made reference to other factors for the housing market that Burry did not mention. Seeing that he quoted the post means that he agrees with the real estate professional that wrote it. The blog post noted that the surprise from inflation raised the 30-year fixed-rate mortgages to 6%, double of what it was the beginning of 2022. The author also said the stock market would be down hell of a lot more if investors understood that the fallout from the housing market would eventually lead it to grind to a halt. The author attributed the rapid Fed interest rate increases to the Fed's war in Ukraine and the sharp increase in energy costs for creating inflationary pressures in the housing market. Burry believes that the economic downturn is just getting started and that sticky inflation will limit the Fed's capacity to cut interest rates. High interest rates will increase the cost of housing dramatically and reduce demand for more expensive homes, eventually causing homeowners to lower prices if they intend to sell them. How does Burry plan to survive through all of this and even possibly make millions from it? Now you might have been thinking of what you can do to survive this future crisis. Well, Michael Burry is already ahead of you on that, so the best thing will be to learn from him. Burry has likely escaped some of the market fallout this year as he sold almost all of the stock in his fund's portfolio during the second quarter of 2022. 60% of Burry's portfolio now contains real asset companies. This is a major shift from his previous big investments in companies that provided digital services or were internet-based. This could be Burry's way of surviving the inflation, investing in companies holding physical assets with infrastructures and that provide real-world services. In times of inflation, the worst position to be in is holding cash long-term as its purchasing power is eroded. Burry's inflation projections have led him to move from just holding cash to investing in physical assets. Inflation appears in spikes. When the spike is resolving, it won't be because of Biden or Powell. It will be because that is the essence, the nature of inflation. It resolves, fools people, and then comes back, Burry tweeted. Burry now has over 50% of his investments in prison stocks with GEO and CXW. This move alone says a lot about how he sees the economy in the coming months. Burry has been successful in many of his predictions over the years, even if they came a bit too early. So it's likely we will see the same thing this time. What do you think? Do you think Michael Burry's predictions are correct? Or are they baseless? Let us know in the comments.